The markets may be worried today, but you shouldn't be, because Investor Beat starts now. Thanks for watching. I'm Mark Reeth. The Dow is down today as tension mounts over what to do about Syria. The U.S. government may be considering a military intervention, which, in the meantime, has scared off some investors. Joining me in studio, double David Trouble. We have Dave, the legend Meier, and Dave, infant money Hanson. And guys, our top story today is the market itself. Now, Dave, when you look at the market and how it reacted to merely the rumors of a conflict with Syria, thinking as a long-term investor, are you at all concerned?
No. The market's down today. Maybe this is the trigger of a broader market pullback, but if we step back and look at just the history of the stock market, every 11 months or so, that's the average, the stock market over time has dropped about 10% from highs. So we're kind of due for a market pullback. Not saying that this is going to be the one, but it happens every 11 months or so in history. And sticking with history, if we look at the 20 biggest drops in stock market history, 10 of those, so 50% for your math there, 10 of them are due to kind of these external events, so things like September 11th, and kind of things that no one could be able to predict. So when I look at something like Syria, yes, it could cause the market to fall, but in the long run, is it really going to hurt companies, really hurt value? No.
All right. A lot of people are looking at the market right now and saying it might be a little overvalued. In fact, the last time the market was this high was back in 2007 before the meltdown.
Yep.
And then before that, it was in 2000 before the big tech bubble burst. Are you thinking that now's the time maybe to take a couple of profits?
Well, I can certainly see that argument. However, if we look at those two events in time, the conditions aren't the same. You know, today, yes, our economy isn't growing as fast, but it's continuing to grow. We don't necessarily have a tech bubble, and we don't have a financial bubble either. So I would say no. And if you have investments in great companies, even if there is a pullback, as David mentioned, you know, over time, those companies will create value for you.
So, keeping in mind the market may be overvalued, some turmoil might be coming up from Syria. Are you going to be buying into that and hoping that things go up from there? Or are you siding with the bears and just going to wait and see how far down the market crashes?
I think you should definitely not be trying to time the market in terms of, well, if it's down 2%, maybe I'll wait till it's down 4%. I think that's a very foolish task, a lowercase f.
Of course.
There. I think what foolish investors should be doing is still looking at the companies from a bottoms-up perspective, find the good companies out there that are going to thrive over the next 5-10 years that aren't necessarily worried about Syria today.
All right, let's get to some of the day's movers and shakers. Tiffany reported its quarterly numbers this morning, and things look strong. So strong, in fact, that the company raised its guidance for the full year. Dave M., do you have as much faith in Tiffany as they seem to have in themselves?
You know, when you put out a report that beats forecasts and you raise guidance, that's always good for a good lift. Unfortunately, the stock is actually down a little bit today.
True.
But one of the things that I saw that I really liked was really strong sales coming out of Europe. There have been a number of companies who have reported weak sales in Europe. So that was a nice little piece of information. Look, Tiffany's is a very strong franchise, and they serve people with money. Those two things, over the long term, tend to be a good combination.
It's weird to say it, but shares of Penney are up. Do we have that right? They're up? All right. Investors clearly aren't taking Bill Ackman's departure too hard, with the stock up over 3% today. Dave H., are you looking at it today and thinking, yeah, this is going to last for a while, or is this just a one-time event?
I think it may be just a one-time event. I'm sure they're glad to kind of have their name and Ackman's name out of the papers, hopefully, in the long run. Is Penney a long-term winning stock? I'm not sure. We talk about buying companies that you'd be comfortable buying today. The stock market closed for 5 years, like Warren Buffett says, and if it reopens, your company is still going to be doing well. I cannot sit here today and say I'm confident Penney is going to be doing well in 5 years. Is it a buy at some price? Yes. Every stock is a buy at some price. Is it today's price? I don't necessarily think so. I'm staying away.
Starbucks is down a bit on the news that CEO Howard Schultz doesn't plan to cut hours or health benefits for his employees ahead of the healthcare overhaul next year. Dave M., is Schultz doing right by his employees but doing wrong by his shareholders?
Yes, he is doing right by his employees, but no, he is actually not doing wrong by his shareholders, and let me tell you why. There's a great book by Raj Sisodia called Firms of Endearment, and in there he makes a very strong case that companies that serve all stakeholders, shareholders, employees, suppliers, etc., they outperform other companies that don't over the long term. Schultz is living and breathing that playbook at Starbucks, and shareholders will be just fine.
Last but not least, McDonald's announced that it would begin selling chicken wings at select locations next month as part of its efforts to diversify from beef and capitalize on football season. Dave H., are you not going to be buying some McDonald's wings for the big game next week?
I don't know if I'm venturing to McDonald's wings, but from a stock perspective, McDonald's, it looks fairly attractive. When we look at it from just a price to earnings multiple, it's around 17 times earnings, right about where the broader market is. And when you throw a 3+ dividend yield on top of that, this is a business that generates a lot of free cash flow, expands into a lot of different markets. I don't know about the chicken wings, but the stock looks pretty good.
All right, that's going to do it for Tuesday. But before we go, Dave M., what's one stock you're watching this week?
One stock I'm watching is IPG Photonics, ticker symbol IPGP. They make fiber lasers, and they are disrupting the laser industry. What we have is a business that's getting stronger and a stock price that seems to be stuck in reverse. When you put those two things together over the long term, investors tend to come out ahead, especially with a company with the quality of IPG Photonics. Investors, take a look.
I like it. Dave H., what are you keeping an eye on?
Keeping an eye on Progressive, the insurance company. I'm sure you're familiar with the commercials and flow. Not looking at it because of her, I'm looking at it because of the business model. They have a great track record of writing good insurance policies, and they're being very innovative in how they do things with a snapshot, which measures how you drive and prices your policy based on that. So some innovative things there, some good history. That's why I'm watching Progressive.
Okay, well, for the legend and infant money, I'm Mark Reeth. Thanks for watching. We'll see you tomorrow.